Hello Mavericks, this is Imri and welcome to today's currency recap. It is Thursday, January 18th. So not the most exciting day overall for currency traders, but as usual, we will be doing a review of today. So we'll be going over any meaningful news from the day, taking a look at the broader equity markets, some commodities as well. We'll then be taking a look at the current markets and doing some technical analysis on the major indices, taking a look at our proprietary currency baskets, seeing if there's any major news reports to close out the week, and of course, wrapping things up by seeing if there are any setups in the currency markets. Let's get right into it. So in this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable currency trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So if you are a technical trader with a technically based trading system, we want to meet you. So please click the application link in the description below this video. Now let's break down today's market action. Starting things off with some market analysis. All right, so the big news of the day is that the markets were selling off in the, before we opened up, and then big tech drags the market higher, Apple shares popped. In the currency land, however, crypto has sold off and the dollar has remained largely flat. Now, in terms of the day's performance, you can see that crypto is the biggest loser on the day. Oil rebounded nicely, gold up a little bit as well, and stocks had a pretty nice day also. If we take a look at the currency world, however, the Swiss franc didn't perform all that well today, but otherwise the yen kind of flat, the dollar kind of flat, the euro marginally down. The Aussie and the pound, I guess, were the biggest winners on the day, but today's volatility has felt fairly muted, and I didn't really see any great trades taking shape today. And on the cryptocurrency side of things, it was just pretty bloody all around. Bitcoin leading the way down almost 4.5%, but none of the other major market cap coins that we track remained unscathed. So they're all down on the day also. Okay. As far as the stock market goes, we're still sticking with a +3 because guess what? We're above both moving averages and the slope of those moving averages is still positive. The 20, I suppose, is flattening out, but we still have a slightly positive slope here. Now you can see on this chart of the S&P 500, we're still so close to those new all-time highs. I still believe it's almost a sure thing that we are going to pop a little bit higher. However, I think after we do pop higher to complete that new all-time high in the S&P 500, we are in for a very dangerous, or the market will be in a very dangerous and precarious position. And I can see a pretty sharp sell-off ensuing. We're not there yet, however. I think right now we're still trading sideways in this base. We're going to pop higher, and then my expectation is that we're going to then trade down. It's healthy. We need a clean out. As far as news of the day goes, the only news event today was that unemployment claims came in well underneath forecasts, and it hasn't been too much of a market mover one way or the other. It did affect the stock market a little bit in the pre-open, but stocks recovered nicely. Retail sales in the UK will be coming out around 2 a.m. That'll be important to keep an eye on, considering that UK inflation is still, I don't want to say raging hot, but it's still remaining more elevated than the Bank of England would like. And then we're going to get preliminary consumer sentiment numbers tomorrow at 10 a.m. Eastern. Okay, so now for some currency analysis, taking a look at our velocity scores. Although the Aussie was, had a decent day, it is our winner on the velocity side of things, +3. Same with the pound at +2, the loonie at a +1, the dollar and the Kiwi dollar at -1. And then we get to the interesting side of the spectrum where the euro, the yen, and the Swissy are all at -2 or -3. So we're going to definitely be taking a look at those currencies. I've been dead wrong on the Swiss franc. I thought we'd have a nice pop higher, a trend continuation pattern. Doesn't look like that's what we're getting. And we're going to explore that a little bit further now as we head into TradingView. So starting things off, we've got the Japanese yen here. Now here's what's interesting. All right, the yen no doubt has been weak From an Elliott wave perspective, I think we're pushing the limits of what is possible still, considering this bullish scenario I have. I'm just going to throw my labels on here so you can see how I'm counting this from an Elliott wave perspective and what the most likely count is still. Now, if I'm looking at this, you can see that we have a 5-wave advance followed by a very clear 3-wave pullback. Now, the interesting thing is that this pullback should almost be over. Now, the pullback is resolving in an ending diagonal or falling wedge if we want to use classical chart pattern terminology, and we've done roughly 80% in terms of a retracement. An 80% retracement is steep, doesn't break any rules, doesn't invalidate this bullish view that I have on the yen, at least in the short term, but it does start pushing some limits. It is pushing limits, no doubt about it. So what would I be looking for? Well, I'd like to see a pop out of this falling wedge here. I have a hard time still being short the yen given on a technical basis where we are in the crosses. Now, that doesn't mean that there aren't any short yen trades to be had. I think there could be some. I just don't see the risk right now. We'd have to work off, or all I see is risk, I should say. I think we have to work off some overbought conditions in the yen crosses before they're ready for another run. So that might coincide, or it should coincide if that is the case, with a little bit of short-term yen strength. So where's the bullish scenario completely wrong? Obviously, if we break below that November 15th low all the way down here in the basket. If I'm looking at momentum, all right, what I'm seeing here is that we're still in fairly, we keep hitting oversold territory, getting a weak bounce to work off those oversold conditions, and then we just keep grinding lower. That is momentum that's consistent with what I would expect to see in a falling wedge. Now, I want to make something very clear. There's a difference between forecasting a market, analyzing a market, and then trading a market. I can forecast all I want, but if I don't see the trade trigger on the actual price charts on any of the yen crosses, there is nothing to do, right? So we can forecast all we want. Just because we forecast something doesn't mean that that's exactly how the trade's going to play out. But in any case, moving on now to the dollar. So with the dollar, I was saying we are going to run into this resistance area. We've just missed it. We might still shoot up to tag it, but I would expect dollar weakness to start making itself known around where we are right now. And if I'm right, and that this rally in the dollar since the end of last year is counter trend, then we should have some nice short dollar trades to take advantage of. It's too early for that right now, right? I'm forecasting an intermediate term move here. I just don't see a good trade setup yet. And frankly, in my opinion, to start this year off, it's been largely fairly quiet. Only a couple of good trades, in my opinion. Being short Swissy, being short yen, those trades would have scored. But now that the Swissy, and we're going to take a look at the Swissy in a moment, is reaching some interesting levels, makes it tough, at least immediately, to continue being short the Swiss franc. I'll explain why. So originally, I thought we'd be trading within the boundary lines of this triangle, which typically is a trend continuation pattern, but the triangle broke lower instead. And you can see now that we're in technical support. So we have these lows here. If we break below those lows, I'm happy to be short the Swissy. But if we bounce, and the momentum signatures aren't very telling. We don't have any bullish divergence. We don't have extremely bearish momentum either. I think we're kind of in a no man's land right now. If we start seeing a bounce here to help confirm this double bottom or potential double bottom, then I think we can get back to the top of the range. If we break down, however, through support, that puts the lows from mid-December in focus. So either way, I think some good trading opportunities in the Swiss franc. Okay, the euro, I think, is starting to get tired. All right, we've finally hit overbought conditions on the basket. We're trading in this rising wedge. All we need is a convincing break lower. This is what I'd like to see. I'd like to see a break below this trend line, some consolidation, and then the euro can go. Now, what's interesting is that we're seeing some weakness, or at least I'm seeing some weakness in the euro and the dollar. Is it possible that both those things happen? Sure. But if the dollar is weak, I'd expect the euro to be relatively strong and vice versa. So it is possible we just find support off this lower trend line and start grinding higher. I just don't see on the actual currency pair the setup itself. I think the euro is much more interesting if it does break lower. And it's similar situation with the pound here, where we're kind of in double top territory. I mean, we've technically broken above here, but pound's been, on a tear. Does that mean that it can't keep going higher? No, of course it can still keep going higher, but we do need a breather at some point. And it's very hard to just plug your nose and buy the pound at these kinds of lofty valuations or lofty price levels. So we've gone up in a straight line since the start of the year. That's a remarkable recovery by the pound. I'd like to at least see some sideways action or a pullback in order to continue buying the pound, or a break back below this resistance area, in which case we could look for short positions. I think the pound's kind of in a tricky spot right now, and that is a consistent theme with a lot of these currencies, where I just don't want to touch them until the picture becomes a bit more clear. All right, the Canadian dollar. Although we are trading a little bit higher than Canadian dollar since the start of the year, the move is best described as a grinding kind of move higher. I don't like those moves because it makes it very difficult to be long the loonie when it's very choppy. It goes up a little bit, goes down a little bit, goes up a little bit, goes down a little bit, and steadily marches higher. That kind of price action tends to be counter trend in my experience. So what I'd be looking for is a reversal at some point in time. But loonie's been strong over the last few trading sessions, no doubt about it. So if you are looking for a reversal in the loonie, it's very prudent at this time to be cautious and wait for the appropriate chart pattern to set up. I'm really liking the Aussie here on a pullback. We kind of had this false break through the bottom of the support region and pop right back up. RSI looks like it's going up in a straight line. On the 1 hour chart, I'd really like to see us pull back now. A base or a textbook bull pullback would be ideal and set us up potentially with a nice Aussie long trade. New Zealand dollar, said I've been keeping an eye on this broken out inverse head and shoulders for quite some time now, and it looks like the neckline's holding as reasonable support here, but we still don't have any evidence of a turn higher, and we're now in support territory. So in my opinion, it's do or die time here for the Kiwi. I really would like to see a bounce if the Kiwi strength is going to come back. But if we break below the support, then I think it opens the door to being short the Kiwi. So long story short here, I just don't see any good trades shaping up right now. I have a lot of forecasting going on, but nothing that's leading to a clear-cut actionable setup. And that's likely to be a theme we're going to be seeing over and over again in this year. I'm hopeful that volatility in the currency markets is going to return, but we will have periods like this right now where there just isn't a whole lot going on. And when there isn't a whole lot going on, it's best to stay on the sidelines. All right, that concludes our currency analysis. So in conclusion, as always, play relative strength and weakness. It is by far the easiest way to make money in the currency markets. It's not overly complicated, but what makes playing relative strength and weakness difficult is that you have to be patient, because sometimes things are just all closely matched together. Everything's roughly kind of anemic, or it's, I don't want to say it's rare, but you're not going to see one currency super strong and one currency super weak all the time. And even when that is the case, you still have to wait for the right technical setup to take advantage of. And that's where proper position sizing and following your trading plan comes into play. All right, traders, thank you for watching. I'll see you guys soon. Bye for now.